It's to help, but the goal is to help the people that actually need it. And what you find in a time like this is a lot of people trying to take advantage of programs that maybe aren't justified, right? If you're still working, the ability to pay, pay your mortgage.
I've got a lot of great people on board with me today, and I want to give a little disclaimer out. All of these guys are amazing. I'm going to introduce you to all of them. William Ledesma should be on in just a second. He's having a problem with his camera, but he should be on shortly. Darren Corder is out of Delaware, right? If I'm not mistaken. Top producing mortgage lender with Caliber Home Loans out of Delaware. I've got James Uston with me, Vice President of the home team at Freedom Mortgage out of New York. Right now, Ronnie Eith is the branch manager down here in Miami. Jennyffer Kurz is a loan officer down here in Miami. And then William Ledesma should be on shortly. Ledesma is with PRMG Doral down in the west side of Miami, a senior loan officer there. And I wanted to be able to bring attention to something that a lot of people are talking about, and that's the CARE Act lending, what's happening with mortgages, what's up with things like forbearance. We want to try to answer as many questions as possible. And I've got a good systematic idea of how we're going to go through this. And, first thing I want to say is disclaimer. We are not the government. We are not Fannie Mae and Freddie Mac. We are not lawmakers. All we are is experienced professionals in the business. And all we can bring you is our professional opinion. So please don't listen to what we're saying, run with it as an opinion, do your research, but please don't take what we say and go running off to the world thinking that that's, it's gold, okay? I need to make sure I voice that out. A lot of these guys are with different companies. You see Freedom Mortgage on, you see PRMG on, you see Caliber on with me. We're showing love in a lot of different directions. And as you all know, my wife, Jen, is on with us too. She's with the home team at Freedom Mortgage down here in Miami. They're going to give us their professional opinions. My name's David Kurz. Welcome to another episode of the Enterprise Coaching with Dave Kurz. And man, I'm excited to have you guys with me. Thank you for doing this with me.
Thank you for having us.
Yeah. Very appreciated. Very appreciated. Thanks, Dave.
Awesome, man. Ledesma, you on, right?
Yes, I hear you.
All right,
you can see me, right?
Yep, I see you.
All right, cool.
You even got your haircut and everything.
Let the beard grow back.
It looks good now. I like it.
I might have to go back to the bald look, man, because I haven't gotten a haircut in like 3 weeks yet, 4 weeks. All right, guys.
David, I haven't parted my hair on the side in a month. Yeah, this is not good.
All right, guys. So, man, very appreciative to everybody who's tuning in. We've got a nice group of people logged in right now, and definitely on Facebook as well. We're live on Facebook. Please, guys, go ahead and share it on Facebook. Let's get this information out. So I want to talk to you guys, and we'll start, if we could start with James, who's VP over at Freedom. I want to touch base with you on something that you can shed some light on. Particularly, maybe it might be different in the different companies, which is why I wanted to have a couple different representatives. But what's happening right now in the mortgage industry that could affect buying?
It's a very loaded question.
It's a loaded question, right?
And I'll try to save some for you guys because, I don't want to touch on it all, right? We want to bring some detailed information. But first and foremost, I think the first thing that people saw was volatility in regards to interest rates, right? Because the market started reacting before this pandemic really hit America to the degree that it is today. So we started to see warning signs as it was happening in China. And then really when it expanded into Italy, our market started to respond. And that response caused it to drop substantially. When that happened, what that in the purchase market is it caused a high influx of refinances because people wanted opportunity. So that was kind of like the first deal, and that was before program restrictions starting hitting. Today, what we're dealing with after that volatility, which is still happening, and lender to lender, what's available, is a par rate available, what pricing is even there, is the jumbo product available. Now we have these, and that's kind of what you were referencing in regards to institution to what the agencies are like Fannie, Freddie, or Ginnie. So this is happening daily. What we have tried to do on our side, as I'm sure other lenders have, is to really get in front of it to protect that purchase business or the inevitability of being up, right? So we wanted to look at existing transactions first and foremost, inform the clients. First off, see how they're doing, right? Reach out to already doing business with. Is everybody healthy? You guys safe? So that's that first step of trying to understand that the deal that's in process is still actually of today. Then if it's not, we can aggressively look at how we're going to hold the deal together for post-crisis, right? Because look, we all want this to end tomorrow, but the inevitability is that it's going to last a little bit longer. So we have to address how long is the deal locked for if there's a position on the interest rate, and then is the deal going to be able to qualify? And past qualification, does the borrower still want to buy? Yeah. Or still want to sell? This creates uncertainty, which in essence causes fear. So I don't want to get too much more detail. I want to leave it for some of the other guys, but
yeah, and we can open this up. So Will, what are you starting to see? What are some of the major changes that you're starting to see in your market with your buyers, with your agents? What are some of the major, things, major changes to loan structures that you're starting to see that are affecting current deals?
I mean, there are a lot of changes happening. For me personally, I guess not much, because the loans that we're doing now is basically what I focus on, all the agency loans. I'm seeing something positive on my end. I'm seeing more of an influx of people that got turned down in other places. They were trying to go non-QM and those type of loans, and now they have to go through a regular or more complicated process, which they didn't want to do before. The biggest issue, I guess, that's affecting us.
Can I stop you? Can I stop you for a second? What's non-QM?
All right, so non-QM are the loans that don't fit in a regular box. So the agency, the FHAs, the conventionals, and the VAs. Typically, somebody that wants to go with a bank statement loan, like a 12-month bank statements, that's like a non-QM. Like foreign nationals, that type of products are non-QM.
The creative stuff.
Yeah, the creative stuff. But the biggest issue that I guess I'm seeing is the whole credit score thing, where a lot of other banks, and I know everybody got the announcement from Chase saying that they're raising their minimum credit requirement to 700. I know from a lot of my broker buddies that a lot of their wholesale lenders are requesting 680 credit score, and we raised ours to 620. So, right. I mean, we're still probably one of the lowest scores, credit score requirement, but still, it's before it was 580 or 550, now it's 620, just so they could get in the ballgame.
And I know a lot of lenders out there are now, even if you raise it up to 620 or 650 or 700, most FHA loans are typically pretty tight loans. Are you starting to see, like Darren, in your area, you're starting to see that the requirement for reserves is starting to be requested?
Well, sure. I mean, I'm always trying to decide in my head if I want to answer questions transactionally or institutionally, right? Okay. So if you're asking me what my transactions look like, every lender across the board in some way, shape, or form, if they haven't done it, they will be doing it. It just hasn't happened to them yet. They're going to be raising credit scores. They're going to be looking for more reserves. They're going to be looking for lower debt ratios, and that's not just going to be an FHA loan, right?
Yeah, right.
I mean, what people don't understand is when we hear, and anyone and all of you guys can agree with this, I'm sure, we all have a back end to our front end, and the back end is institutional investment. And they are the ones who really ultimately decide what they want to invest in. And so if we're delivering loans that were tough to begin with before this happened, it's 10 times harder to get them to want to invest when they don't have a backstop for their investment. And so what I can tell you is, hour by hour, We're getting to the point where we're just waiting for the memo.
Yeah.
And when the memo shows up, then we have to move. I would say really, if you really want to know what I think the biggest pain point with mortgages right now on the front end, it's employment verification. 620, 720, it doesn't matter. If you're furloughed or not going to work, then we have to protect the institution and the system.
Right.
And as hard as that is to do, many lenders are doing verbal verifications of employment day of settlement, morning of closing, maybe day before. I'll give you an example. I have a loan that just got pushed back 2 weeks. Well, it was supposed to close Friday. We did our 3-day VVOE, verifications of employment. It got pushed back 2 weeks. I had to call everybody and say, we're going to do those verifications of employment again 2 weeks from now. It's just the environment.
It's just going to happen. It's the environment that we're in. And at the end of the day, folks need to realize that the institutions themselves have to protect themselves, something that a lot of people don't understand. And any of you guys could take this. Maybe, Ronnie, you want to jump on this. What exactly is a secondary market?
Yeah. So, Dave, just to jump on what Darren said as well,
And by the way, I don't want to cut you off, Ronnie. Anytime you guys want to jump in, it's a conversation. So let's, we could just run with it. Anytime you guys want to jump in.
Just to jump on what Darren said, and then I'll go into the secondary marketing. So, these verifications of employment, you got to understand that most of these companies they don't have their employees working in the office. They're working remote, including the HR team. And if the HR team doesn't have access to certain records, it's going to further delay being able to verify their employment. I've always said that credit, we could work with credit. If somebody has credit that's challenged, we can work with it. Just give us some time. But income, you can't change somebody's income. Their income is their income, right?
Right.
So that's a challenge. Now, secondary market, that's where loans are pooled up and bought and sold, and that is the real issue that we've had, and that's why lenders have raised their credit scores. That's why rates have been risen, somewhat artificially, because normally rates are in lockstep with the 10-year bond, but we haven't seen that now. And sometimes you see the 10-year bond is at historical lows, like mind-blowingly freakish lows, and you would think, well, why aren't interest rates at 3% or 2.5%? And some banks, like I've seen major banks, interest rates are at 4.5%, 5%, because that's their way of controlling the loan flow into the process, because they don't want to bring the loan flow in. They just want to keep the loans really, really clean, so that whatever they can get sold in secondary markets is going to be really, really clean, so that this way they know that when they sell the loans off, they're not going to be forced to buy them back. They're not going to be forced to, to refinance loans to get them off of their books or do whatever. So that's been another challenge, and that lack of liquidity in the market space, in addition to everything else, is really what can predict what's going to happen in the future with the housing market.
And that's a big reason I wanted to have this conversation with you guys, because this leads into a lot. We're all about educating the folks out there. A lot of people don't even understand the secondary market and how important that is to liquidity for a bank. Not only that, but a lot of people don't understand what the bond is, right? And so, I was having a conversation with James. James, we talked about this. FHA loans are going to get tighter, because something that maybe a lot of people don't know, if you don't pay your FHA mortgage payment as a consumer, the servicer is still responsible to pay the bond no matter what, right? I can't hear you. Sorry.
Yeah, no, I thought it cut out for a second, but yes, that is correct. And what you're also seeing, and just touch on a couple of things before I get there, this is all based on risk, right? To Darren's point, each individual lender is going to have a different appetite for risk. So you're seeing bigger players who, at one point also stopped taking any new deals for refinances, not chase clients, right? So they focused on what they had, didn't want the runoff of paper, and then started raising standards. They're also a big player, as others are, in the jumbo market. So the deterioration that we started to see, as you referenced before, was non-QM, or qualified mortgage. That's what the QM stands for. And that are loans that are not backed by any of the agencies. So what you have is these, whether it's people that have hedge funds, people that have just a lot of money, private investors that want to diversify their assets, and they're lending money to non-traditional borrowers in equity, right? So when you're an equity-based lender and you are dealing with an impending, what could be recession, what could be property values dropping, your real return on investment, God forbid they don't pay, is the property, right? So that was the first thing you saw. Right. These hedge funds and private investors are hedged in a market where we saw a $30,000 Dow Jones pull back 10,000 points. So the availability and liquidity of these funds to be in the marketplace, similar to what we, and I don't know the tenure of everybody on the call, but I'm doing this close to 2 decades after the financial collapse through 2008, right? So the first thing we started to see pull back was stated no doc. You know, any type of non-traditional Alt-A or subprime product with a first to go. And then the standard shifted where you had to use your W. Prior to that, people, even if you could do an FHA loan, the common practice in the marketplace was to go subprime just because of sake of convenience. And that was just the industry back then, totally different, right? And then you started to see all these programs go away. And it took us quite some time to come back. You started to see probably as early as 2015, drips and drabs of certain investors in the marketplace because they said there's a need for this. I still have this large pool of self-employed borrowers who have good jobs, just don't show enough on their tax returns, have large down payments. And then you started to see it really develop into a sub-industry in essence, right? So right. If you can look to the past to predict the future, which a lot of people like to do in very historically, you know, just on regular history, forget about this, this is going to come back. It's just a matter of how long this deterioration goes and how much people get hurt in ancillary investments that they have. But outside of that, you know, it's funny. I saw this morning, Ben Carson, who's the president of HUD, talking about them trying to put something in play where these 3 months where they're giving this forbearance can actually be put into a separate loan that's non-interest bearing, that's due as a balloon at the end of the term of the existing loan. Meaning, instead of having for me to come current after 3 months, I don't have to concern myself with that. Because, which you brought up earlier, each lender, based on the same way they look at risk or appetite, it's the same interpretation process to these guidelines that were put forth, right? So each individual consumer is going to have a unique situation. Should they qualify? Are they affected by COVID? And as a servicer, as if you guys have servicing on the call and for everybody out there, our goal is to help the consumer, right? This is something that is unprecedented. The goal is not to make someone make a payment or be concerned with not being able to stay in their home. It's to help. But the goal is to help the people that actually need it. And what you find in a time like this is a lot of people trying to take advantage of programs that maybe aren't justified, right? If you're still working, the ability to pay, you know, pay your mortgage. We're always going to give that advice. But if you're affected, contact your individual servicer, talk about your unique situation. And the goal across the board is going to be to help the consumer.
Right, right. And I'm glad that you brought that up because I think that a lot of people are talking about forbearance right now. And one of the things that I mentioned, and again, this is opinion and stuff, right?
Yes.
I posted the other day on Facebook, I said, forbearance is not a bad word. And people lost their shit, right? Like some folks were like, you're right. Some folks were like, you're wrong. You know, Darren's like, hey, I just talked about that this morning. You know, check out this link. And what I was saying was, if you're still working, still earning an income or have a savings or whatever the case is, and you can pay your rent or mortgage, pay it. You owe it, pay it, you know? But if you find yourself in a situation where you did lose your job, where you are furloughed, where you are out of work, where there is no income and you absolutely need it, talk to your servicer, right? And you just said something very interesting, how Ben Carson already at this point, we haven't even gotten to the second payment yet. Like people are getting forbearance this month right now. It's the first one they're missing, if they're missing even this one yet, right? And they're already talking about ways to ensure that millions of people don't go into foreclosure in 90 days. And
Yeah, hey,
so,
Dave and Jimmy.
yeah, jump it.
What I find interesting about forbearance, and this is the old saying, as you peel back the layers of the onion. It sounds great, all right, the government's gonna, give you permission, they're gonna, incentivize your lenders to not have to collect your payment and allow you to go into forbearance for 90 days or whatever. But from a mortgage standpoint, it is a dirty word on your credit report, because there's all different codes for how you pay late on your bills and what kind of loan workout programs that you have. And if the code on a mortgage, I believe it's either a 9 or an 8, Jimmy, maybe you know a little bit better, or Darren. If you have a 9 or an 8 or one of those codes that you're in forbearance, it's a different set of lending guidelines than if you try to refinance or buy a house in the future.
Right.
So it's going to be interesting if they change standard, QM underwriting guidelines for that.
And that's going to be honestly, that's going to be something that's going to be easy to find too, because if what Ben Carson is saying will give you another loan of some sort, that's going to show up on your credit report too. It's going to be very obvious that you had a forbearance set,
Yeah,
But,
I've got an opinion a little.
Please,
I've been studying the crap out of this for the last couple of weeks and listening to people way smarter than me. But I'm always looking at systemics, right? Systemically, what does this mean? There's over I think it was the last number is, since this was approved, we've already had well over 2.4 million approved forbearances in less than 10 days.
wow.
It's up. Yeah. So, this is real stuff. And people don't understand that forbearance in the world of finance is a pre-foreclosure action. By definition, it is a pre-foreclosure action. It's saying we're going to help you not have to take the ultimate step of losing your home.
Right.
What they didn't do when the CARES Act came out was they didn't put in any needs-based testing. I literally can go on to my lender right now, fill out an online screen in literally 3 minutes and say, I have been affected by COVID-19, mark yes, and my forbearance starts.
And that's
a huge difference than 2008, 2009, and 2010. Huge difference. And so when you are the investor who says, wait a minute, there's $10 trillion in loans out there, and there is no needs-based testing for someone to get a forbearance, why would I want to lay down my billions of dollars into the system to keep that system? Grant Cardone says, money that is not in motion is dead. And so if we stop moving the money around, it's going to kill what we do. So I'm hoping, and I don't want to be an alarmist, I'm just being pragmatic and honest to the people that are watching us today, what we're dealing with from a lending and a financial systemic standpoint.
So to everyone out there, or to all of you guys, like, CARES Act mistake? Yes.
Yes.
Big issue on the CARES Act. And while we say that, when you touch on that, Will, like, everybody is waiting for the CARES Act to give this huge injection to the mortgage market to be able to help out and allow more lending. How did we see that work out?
But I also want to add something to what Darren had mentioned, because there's other layers to this, right? So let's just say you have 1 million forbearances across the country and things normalize after the 90 days. Those 1 million people, and this may be issued through the credit reporting agencies, and they may say that, it's a moratorium for mortgage lates during that time period. But now you're going to have that staggered effect, right? Is the person going to qualify? Are they going to fall under the traditional guidelines? Or is Fannie, Freddie, or Ginnie going to put out specific guidelines for post-COVID? We don't know any of that. So giving direction to the consumer, difficult. We're reading, as Darren said, we're taking in a lot of information. Some of it is misinformation because it's interpretation of legislation and also wishful thinking of what's going to happen. Unfortunately, this clear path to what is going to be the new normal, nobody can really give that stamp. And like you've mentioned multiple times, it's opinion. But What happens when you're in the process of a refinance? You do what Darren just said. You hop onto your servicer and you say, hey, I want to take advantage of this. My mortgage payment's $3,000. I'd like to keep an extra $9,000 in the bank, under the presumption that you're not going to have to pay it after the 90 days is up, right? But they also wanted to go from 4.5% to 3.25 on the 30, take the 20 to finish their pool or their kitchen, right? So they were in process of refinancing, but hey, I want the best of both worlds. Let me skip 3 payments and then possibly skip 1 to 2 more via a refinance and secure a lower payment. But what's going to happen? Are the agencies going to accept that? Are they going to make them come due? Is that forbearance going to affect it? Are they going to say we need to wait 3 to 6 months where they're back consistently working, where we know that they're in full force again? So, you know, to his point, unfortunately, the way that this may unravel over time, you know, and did this servicer follow protocol? Did they report correctly? Again, because that's a major point to the credit bureaus. And I know Ronnie as well. So these are all key points that, you know, listen, it's a discussion topic. Just unfortunately, until these guidelines are posted and these memos, again, to his point, come out, it's all speculation.
Will, you had something on this.
Yeah, so I'm just going back to obviously 2008, 2009, and what happened now. Obviously, we know, I think even they know they messed up on the way they rolled this out. And so let's look three months forward. And now they're trying to maybe fix it, or maybe when the next step or the next 3 months that they support the banks on doing this, maybe they'll start adding some regulations, right? So let's say you're somebody with a regular job that is still working and decide, you know, I'm gonna take advantage of this. Now, consider that after the 3-4 months, you have to pay all 4 months at one hit, right? And acting like a normal person, like the average person does, and I'm talking from personal experience from my own clients, family, friends. Even if you save those payments of $2,000 a month in your bank account, you're going to spend it some other way. You're not going to have the full 4 months at the end of the 4 months to pay it in full.
Most people.
So
yeah,
most people. That's what I'm saying, because that's human nature. So what I'm saying is, once you get into that point, and you're like, oh well, the government's going to bail us out again. You know, they're going to probably extend it again. But now they're going to learn from their mistakes. Next time they're going to say, hey, you know what? You got to prove that you were affected. Now prove to us that you were affected. At what point does that happen? Does it happen in 3 months? Does it happen in 6 months? Does it happen in 8 months? And then if you can't pay the full amount, are you gonna have to request some modifications, submit documentation, so on and so forth? How far can you push it till somebody catches on to the fact that you weren't really affected? Yeah, you don't have overtime anymore. Maybe you have regular hours, but you're supposed to be able to afford your mortgage based on what you were qualified for, you know?
right.
So
I think, and if I could like chime in with you, like I think they just made it too easy right now.
Yeah.
They made it too easy. And it just, like, I think today the news came out that the PPP, the payment protection plan, and all that stuff, 380 plus billion or $1 million or something, it's done, it's gone, you know, they're tapped out. So now the government's talking about, do we make another push on this, right? And I didn't mean to interrupt you. Jen, you had something on this?
No, I just think that that is an option that's available that you should take advantage of if you obviously lost your job. But if you're just taking advantage of it, you know, and just saving the money and so forth, and not looking at what the terms are available to you, you know what I mean? You're putting yourself at risk, and you know, for either future refi or purchase or whatever the case may be. You know, but
and it affects the market as a whole.
Smarter as to how they make this decision.
How is this affecting the market as a whole? Anybody could grab this. Like how? And I'm not talking about the mortgage market. I'm talking about money movement across America, because we all know that America moves with real estate, right? And so, how is this going to affect everything over the next few months? How do you see the market changing over the next few months? Let's say tomorrow, like Trump gets on the TV and says, guys, we got a cure. Helicopters are going to fly over your house. They're going to spray the cure everywhere, right? So it's going to be like crops, you know, you guys just stand outside with your mouth open, and we all get cured, and we go back to work on Monday, right? And everything that's just happened simply in the last couple of weeks, how does that affect us moving forward?
Man, I think honestly, I think that It's going to be right after 9/11. 9/11, it was about a week or two where everything was kind of dead, and then it went back to normal. And I'm kind of having the optimistic, cautious optimism that this is what's going to happen, that restaurants are going to be packed, bars are going to be packed, hotels are going to be packed. People are going to want to go on vacation within 30 days. And that
They're going to be spending that money they saved on their forbearance.
Crazy.
Yeah, and that real estate's going to bounce back because people are going to be like, man, I can't put off until next year to buy a house. If I'm back working now and I qualify for a mortgage, I need to buy a house now so that I don't have to deal with my landlord, not being able to pay rent. I have my house and that's it. Nobody can kick me out, because.
So, and I'm glad that you brought that up, because now what happens? All right, so we go back to work. I'm like, yo, if I qualify, let's make it happen. Like, real estate is different. Like, as a realtor, I look at this differently because I go, we're going like this, and not in price, because price has been good. Price hasn't changed out here in South Florida. I know New York is seeing something very different, but price in South Florida hasn't changed. The only thing that has really changed is a reduction in movement of business. But prices are still okay. They're still good, and appraisers are doing drive-bys. Yep, looks pretty, and so for a realtor, we're looking at it, we're like, we're going to make a V-shaped recovery as realtors. But on the lending side, you guys have made already so many changes to law and how you lend. When does that loosen up and catch back up with the real estate market? And does it?
But I think a key point here is where you are, what area you're talking about. Demographics very important, right? Because what's going to happen in South Florida comparatively to what may happen in New York probably will be two different things, right? Middle America, who maybe is not as affected, a small amount of cases that don't have a stay-at-home or shelter-in-place, right? So how it's going to happen, I think, is going to be more geographical first, and then it's going to be countrywide to follow suit, with certain areas getting reprieve or being back to normal sooner. I think that the goal for everybody on our side, and when I say talking about real estate related, is that we want to get that back to up and running, not just for the personal piece, right? And this is your livelihood, but we are the backbone, right? This is the biggest domestic driver of our economy. If this doesn't get back up and running, which was one of the main reasons, if you remember, after September 11th, why interest rates were pulled back, right? They were pulled consumer spending because of what was going on, which basically helped the economy and go, right? But unfortunately, through those years, people thought the property values were never going to stop. At least now, and I think someone may have mentioned it before, our underwriting standard is really different. So the loans that are in play, the people that, right, and the way that we look at value remain stable. But ultimately, we were due for a recession outside of this happening. We were overdue historically for the way these cycles go. So it was inevitable. I don't know if we're going to see a drop off of a cliff. Again, it depends on where you are, how much your area was affected, and how many people lost jobs and didn't have the ability to repay. So I don't think it's a clear-cut answer. Agencies tend to put things out countrywide versus state-specific.
Right.
So I don't think that will change, but I do think that there will be hesitant because they want to avoid. You said it great. You really want the restaurants? Let's say they pull this off. They just extended New York to May 15th now, right? So we have another 30 days of lockdown. Now this may end sooner, but look at a place like South. How much international travel do you guys have? Go to a place in Orlando, just going off of the state of Florida. There's so many people coming from all over the world that there's a very good chance, if this doesn't to what the flu traditionally is, where it dies out in May because of the temperature, what's going to happen? You're going to see a spiral effect. That early rebuild the economy could make us be home for too much longer. Spin out of control. So I'm just concerned that happens prematurely. And I think that it'll make it much worse for all of us, and irrelevant of industry, just as human beings.
I'm paying attention to Texas right now. Texas governor said he was going to put out policy on how to get people back to work now, which I found really interesting, because if anybody's going to do it, it's going to be Texas, right? Go big or go home, right? So I said, I'm interested to see what it is that he intends on doing. Like, how do you open restaurants and let people back out of their houses again and what policy could you actually put in place that would save lives and protect people? It's going to be very difficult for them. And we talk about this, and I kind of want folks to understand that these regulation changes that are happening in the mortgage industry now, whether it be reserves, higher credit scores, et cetera, I don't know that they will go back to being so quick about saying, okay, well, I know we're up at 700, but now that everything's back to normal, we're back down to 620, right? And I think we need folks to understand that even post-COVID, and maybe for a little bit longer, while you're out there showing houses, it still might be a little more difficult for your average client to get a loan.
Yeah, I've got I've got a thought on that. So, I'm involved in, I don't know, however many Facebook mortgage related pages, and I don't I sit and I just watch and kind of get a feel for what all the loan officers, right? Because I'm a loan officer, I'm on the front end, right? You're a real estate agent, you're selling and buying houses and helping your client. I'm at the client level, boot on the ground. And when I see the loan officers asking the wrong questions, who can go down to a 580 still? Who can do this and who can do that? That's not the question. The question is, what resources are you using to help the client get into a better financial position to be a qualified borrower as fast as possible? That's the question. What are the resources you can? Listen, why do you want to go to a 580? Help them get. Listen, I always make the joke, and like James said, been doing this for almost 20 years now. I'm sure a lot of experience on the screen. Cash is king, credit is queen, and they walk down the aisle together. That has always been the right answer every time, no matter what. And so the other thing I say to people is, if I don't ask you about your credit, you're doing it right. So why don't we put people in a success plan? You got what you got. If you're working at ABC Company, you don't like what ABC Company is providing you, you got two choices. Figure out how to work within what ABC Company is allowing you to do, or go to DEF Company because you think that they're going to give you something bigger, better, or more aggressive. But why don't we help our clients be in a position to be stable neighbors in our community by helping them with their credit and helping them learn how to budget a dollar and how to be good stewards? I just don't know where this conversation has been so lost. And don't mean to get on my soapbox about that.
No, that's fine. But you see, that's the difference between what you're seeing on those pages with a lot of mortgage officers out there, blah, 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 blah. And the difference between you guys sitting on here, got 20 years here, 20 years here, 20 years here. You know what I'm saying? Like there's 50, 60 years of experience on this panel, right? And collectively. So now we're talking about, and I'm glad this is a good segue, a question for all of you. How can consumers prepare now for post-COVID purchases?
I want to say something before we went into that, because I think I think there's a positive thing about this. So kind of going off what we're talking about before, is this has brought into light information to the clients, which I think is what's going to help us kind of bring this the big push back up, is that a lot of clients that are reaching out to me right now, I'm like, look, you can't do it right now. You need to do this, this, and this. So the education that all the realtors are being portrayed, all my realtors I'm educating with this, I'm like, look, you don't buy because the market is high or low. You buy because I'm lending you the money, because the bank can lend you money. So what people are going to start looking for after this is, I'm buying just because the bank is actually able to lend me money, right? So right now, before, nobody was looking at that. They were like, oh, anybody's going to lend me money, but I'm looking for a deal. That's what everybody was saying. Now it's going back to, look, I want to buy a house. Is a bank going to lend me money? So going forward after this whole COVID-19 thing, once we start doing these new approvals and things like that, people are going to buy just because they're like, I'm actually approved. They're surprised that they're actually approved, and they're going to be able to go ahead and buy. That's what's going to bring our market back up. Second part is, we still have a huge demand. People are acting like there's nobody buying. They're still closing. We have closing going on every single day still through this. And there's such a high demand of people buying, because we have so many people trying to buy, especially like the regular single family residents, the 3-2s, the beginner homes, where this is what we're looking at when the market, we say it's going to be a V right back up, when we're going to have a lot of business back up right after this, is because no matter if you take off a huge chunk of the people that are already interested in buying, you take them all out, you still have a huge demand and you don't have enough supply. Now, sorry, I just had so many things in my head when they were talking.
That's right. It's funny that you bring that up, and maybe I'll wind you back in, but yesterday I was having a webinar, and the guy said, I keep getting asked, when is this downturn going to change? And he goes, I keep asking folks, what downturn? What downturn, right? You just mentioned it right now, and everybody's head kind of did the bobble. Yeah, business is still moving. You guys are still closing deals every day. You're seeing it, boots on the ground. Like you just said, like Darren said, boots on the ground. You guys are seeing these loans happening every day. And I agree with you. Now this is going to open the consumer's eye to, I need to actually be better prepared to purchase a home. Oh, hey, by the way, I need to actually be able to afford it, right?
Yeah, I mean, money stopped moving because of an illness.
Right.
Money didn't stop moving because things weren't open and working quite well. Overall, yes, we saw some headwinds, and I won't bore people with inverted yield curve conversations because that'll make everybody log off. But
I'll pass out right away.
You know, but you know, at the end of the day, this was an illness that stopped our economy. It was not an economy that was stopping. Huge difference, right? And so people are like chomping at the bit. I saw that joke the other day that said, I finally realized that I still love my kids, but I don't know if I like them very much. Why? Stuck in my house 24 hours a day with everybody. You know, people want to get up and get in their car and have a place to go, right?
Yep. That's
so,
over the next 3 to 9 months, there's going to be a lot of movement.
I actually see someone has a question down below finally.
Over the next 3 to 9 months, there's going to be a lot of movement. Over the next 3 months, to be the folks that spent the last few weeks staying with somebody they absolutely hate. And over the next 9 months, it'll be a lot of baby makers that need bigger homes. So you guys prepare. While the market is still moving, how many new loans for purchases as opposed to refi are you seeing come in today as in compared to February? Anybody can pick that up.
So before, because I think I'm unique in this regard because it affected business in New York and I'm various parts of the country. So there was probably a 2 to 3 week before when we started seeing purchases slow comparatively to where everybody else on the call outside of Darren is. So we're still doing purchases, we're still closing purchases, and purchases are still our bank's priority, even from a underwriting queue perspective. We're always going to view the purchase business as the priority. And then you have refinances tiered down into different types of pools with how aggressively you're going after them, right? Are the people working? Are they affected? What area they're in? So all of that affects it. But people are buying. I'm still seeing deals go into contract completely virtual. They're doing virtual open houses. They're getting into contract via Zoom signings, virtual notaries. It's actually, I feel like, going to change a large portion of the way that we in our industry do business moving forward, especially trying to get to South Beach, right, for an appointment in person, or trying to get from the Bronx to Staten Island during rush hour to take a deal, right? So for all of the negatives, I think there will be some positives in the regard of how we're learning to communicate and do business today. But, even to a point of commercial real estate, and what a lot of people aren't talking about this. There's no reprieve lying mortgage on a shopping center, at least as of yet, right? So when 10 of your 15 tenants are non-essential, or worse, 14 of your 15 or all 15, what happens to the commercial landlord? What's going to happen to prices? What's going to happen to all the money that's invested in REITs, right? So big concern for the businesses. And, Darren touched on a couple of these points. I'm just giving my opinion on it. Those businesses that were struggling in that shopping center where that landlord might have been struggling, you have a big problem. And that's just one, because a lot of small businesses, being a small business owner, even outside of the mortgage industry and having that history, as a small business owner, sometime business hits a certain threshold, you're living paycheck to paycheck with your employees, right? So if you're struggling mom and pop coffee shop or a new restaurant, which traditionally percentage of failure to begin with. What do you do? How do you keep the wheels turning? Can you reopen, right? Did that grant go through? Are you going to get the money? Protocol. So all of these things, and I know it's still going to be a large portion of buyers, but traditionally, when you take that level of demand out of the marketplace, the buyers that are there under in value, the properties have sat for a little bit. They use fear and uncertainty to their advantage. Quickly flips into a buyer's, right? So my opinion, again, everybody views it differently. I think that's what's going to happen. I think we're going to have an instant influx, assuming, to his point, antibodies or a vaccine, something hits. So like you said, David, they come by spraying all the houses, right? And we're all good and we're jumping out. That's great. You're going to have a lot of pent up demand at that point. But then what's the staggered effect, right? Side of, and again, first and foremost, we want everybody to be healthy and safe. So it's always tough in a time like this talking about financial problems, because these aren't real problems or associated with real, these are business financial problems. So putting that all to the side, you know, it's just going to be something that, unfortunately, if we had that crystal ball, I see the beach behind Ronnie, we'd all be sitting on it, right? Because we know how it's all going to play out.
Hey, Dave, Dave, I'm going to flip the table on you and ask you a question.
Oh, snap.
What I know that you do a lot of coaching and you do it locally, regionally, nationally, right? So you've got a lot of real estate agents who are relying on your advice. What are you telling realtors to do right now on the buy side, on the list side? Like I've seen your posts, and so I'm not going to take what I know you're probably going to say, but I want to give you the opportunity that there's a lot of realtors, because I'm looking at my watch party. I got a lot of realtors that are watching this today. And so please tell them what you would be doing right now. I'm in the Mid-Atlantic. We don't have that Miami thing. We're all sheltered in place. Pennsylvania is not even allowed to even do showings right now. Like illegal to show houses physically in Pennsylvania. So
I think,
you know,
I could help answer that really quick. And I think, you know, it's an opportunity. Number one, it's an opportunity for all of us, realtors, mortgage folks. It's an opportunity for us to get our businesses organized and start really understanding what the ROI is on the stuff that we put out on, right? And so, and we're putting out financially, physically, energy-wise, time. You know, what's your ROI? What's your return on investment on certain items? Getting your business really organized so you come out the gates stronger than ever, right? But the other part to that is, like, if it took you 3 calls to get a deal in the past, it's not going to take you 30 calls to get a deal. So make 30 calls, right? And so for me, it's kind of like, I'm not telling you to get on the phone and call 30 people and say, man, dude, do you want to buy or sell right now? Like right now, like it's the time, like COVID, I'm in, you know? That's not what I'm saying to do. What I'm saying to do is build relationships with 30 people a day, get on the telephone and make 30 phone calls and call 30 folks and ask them how they're doing and if they need anything, and become a resource. Some of those folks may say to you, man, I don't know what to do. You know, I lost my job, my mortgage is due. And maybe you could say, call your servicer, man, see what they'll do for you. Like simple things like that, right? Or, hey, I've got a great job and I'm a police officer, I'm doing fine, but is now a good time to refinance? Like those are some of the questions that you're gonna get, but you won't get them unless you make a phone call and start having conversations with people. So for me, it's about communication, relationships, coming from empathy and compassion and contribution, you know, because it's the time for that. It's a time for that. And you know, I got some advice in the last crash that really helped me come out of it a winner. And it was a top producer. I've said the story a million times, you probably heard it before. She was a top producer before the market crash. She was a top producer during the market crash and after the market crash. And I asked her, like right after, I was like, how are you still selling homes? And she said, because I'm still in everyone's bunts bench. And what she was trying to say was, I'm still in everyone's face all the time, right? And while everybody else just put their head down and went to work at Red Lobster, you know, no disrespect to that, but to go from selling, you know, millions and millions and millions of real estate to serving at Red Lobster, what that person didn't do was stay in the business by building those relationships. That was a transactional person that was just doing transactions, shooting all the time, and then got out of business because they had nothing to do. They couldn't figure out how to shift, right? And so if you're building relationships with folks out there, and I could go on for hours on this, Darren, you just lit a little fire in my ass. But if you're out there building relationships with folks over this time period, that honestly you ain't got shit else to do, make it happen. And if somebody says I want to see a house, there's so many ways to do it virtually. Like, and look, shameless plug, I'm so stoked that I'm at EXP right now. Like, shameless plug. But at the end of the day, I sat with my wife when this whole thing first started happening. We were in the car, and something that we had not thought about. I looked at Jen. I said, Jen, could you imagine if this began to happen and we still had 3 offices and multiple employees and et cetera, et cetera, et cetera? Where would we be in 90 days if this goes on for 90 days? And she looked at me and she was like, oh my God, I hadn't even thought about that, And so working virtually, I forgot who it was that mentioned it. I think moving forward, it was James, right? Moving forward, we're all going to change the way we do business now. You're not going to want to jump in your car and go from the Bronx to Staten Island anymore, or go from Miami to Miami, for God's sake. Miami to Miami is a tough drive, And a lot of people don't realize that, but in Miami, it could literally take you an hour and a half to go 15 miles, and I think there's going to be a lot of video. There's going to be a lot of FaceTime. There's going to be a lot of WhatsApp videos. There's going to be a lot of Zoom calls. There's going to be a lot of e-signature. A lot of lenders are going to start moving to virtual signings and e-signature, where, a lot of lenders were really hardcore about getting wet ink on paper, and I think there'll be some adjustments to that. And I've heard so many stories already of people going under contract and closing without ever meeting the realtor in person or ever seeing the unit. There's people in New York right now that are still okay and haven't left their building in Manhattan in 3 weeks and are like, okay, we put it off long enough, honey. We're buying that house in South Florida, and that's happening. And thankfully, we're in that market, but and South America is going to be like that too. South America is going to start jumping up and putting their money in a safe place. Things are going to start to change, and so building those relationships is big for me. So I'm going to flip it back to you guys. Go ahead. I'm sorry.
I think there's so much uncertainty with what's going to happen, and we're making adjustments in order to be able to provide products or programs for people to be able to purchase, and that's great. But essentially, we don't know when this is going to be over. We don't, it's not just affecting us; it's affecting people in other countries, and they're probably facing worse situations than we are. And the moment the airlines are open, they might be pushed to come to the United States because their situation is completely different, Right. But here in general, at least we're making every effort possible to make people have some sort of money to make it move. Our programs, although they're a little bit more strict, they're still available, for first-time home buyers and so forth. And they're just more appealing programs now for the secondary market. But that doesn't mean that it's not going to come back. We just don't know when is going to happen,
How blessed are we to be in America? Like, just, I mean, look,
and I feel that the virtual opportunity that we have right now has expanded not only in real estate, but in other markets. I think a lot of business owners are going to change the way they do business. And people right now have more of an ability to continue to run a business virtually than they did in 2008 when everything went down, so we have the ability to show income and so forth. So we're not going to see the same impact. It's going to affect us, but we're not going to see the same impact for sure.
Right. And so, and just so we don't blow Linda off too much, I know James answered her, but Will and Darren, if you can answer the same question, what's your new loan purchase ratio to refis in comparison to February now?
For me, I'll tell you, for me, it's a huge difference because I never did refis. I'm a purchase lender mainly. Obviously, I'm not going to turn down, but a lot of my clients have been calling me back to refinances, so I am doing a lot of them. So right now I'm like 60% refinance, 40 purchase. But I went from being 99% purchase. Like before this, I wouldn't really touch a refi.
Right. Darren?
Yeah, I was up until February, my numbers were 84% purchase, and 74% government, and 50% was VA. So I'm the VA
Wow.
loan guy in my market,
Yeah.
by the way. There's my shameless plug. I eat, sleep, and I know the handbook better than the government that wrote it. But you know, yeah, I mean, I'm probably about 50-50 now, right? But I'm glad you asked that question, because it gives me an opportunity to piggyback to what David was saying to the realtors that are watching. If you've never read the 10X rule, read it now, because this is when you have an opportunity to grab the market in your hands. And when this thing does crack open, those who are doing 10 times the effort in every possible way, in every channel, in every phone call, in every squeeze every ounce out of a stone, get the water from a stone right now. You will be so busy you won't know what to do with yourself when this thing cracks open.
I tell my
So-
coaching students, you know, I'm obviously very big on doing video and getting on YouTube and things like that, and hosting things like this and doing interviews. And I tell my students, like, hey, listen, you need to be doing a lot of this. And I get these responses that say, well, everybody's doing that now. And I go, yeah, but don't worry, they're all going to fall off in about 2 weeks. You know, they're going to run out of topics and not going to know what to talk about. As long as you stay committed and you keep doing it, you'll be the one doing it post-COVID as well. Sorry to break that up, Darren. But,
Oh, no. Somebody asked, what's the name of the book?
10X rule.
Grant Cardone, 10X rule. I've read it twice and I've listened to it on Audible 3 times. It's just, and I try to mentally tell myself every single time that I've never heard it before and listen to it as if I've never listened to it. Because as soon as I start to get that woe is me crybaby bullshit in my life, I listen to some Grant and I get smacked around a little bit and I'm ready to go back at it, man.
Oh,
That's
good.
You know,
All
and
right.
Dave, I just want to throw this in there because I know you do coaching
Please.
as well. Can you hear me?
Yeah.
All right. And I know you do coaching as well. You know, this is an ideal time, and other panels we were talking about this at great length. What an ideal time to take some self-introspection, right? To look at what you may have done well. As you mentioned before, take a real intensive approach to what your metrics are, how you got your business, how you stood in front of. Really look at that. Really look at what your pain points specifically were, or what may have been pain points from an organizational standpoint. See what has put these limitations in place, and take that we traditionally don't have to read the book, or at a bare minimum, do Audible. I used to read a lot, Darren, and then because of my schedule and travel and being in the car, I flipped to Audible, right? So I've done the same thing. I've read a book and then listened to it on Audible.
Lifesaver, right, brother? Lifesaver.
It is. It really is. But I mean, if when we're talking about what we do for a living, a lot of times we get caught in that wheel spinning in the mud type of mentality, right? Where we're not taking the time to sharpen the knife, so to speak, to look at what's out there. And if you just simply sales books, right? Business structure, independent business owner, whatever it is, public speaking, body language, and just there's so much, a wealth of information. And it could be even blogs and articles versus purchasing books or audiobooks. So much. But yet salespeople have a limitation. For whatever reason, the lion's share don't really take that time to invest in themselves. And this is that perfect time, in my opinion. And I think more and more people should be talking about it, and more people should be looking at their individual business to come out of this. Even from perspective, it's very easy to continue to drink, right? Or get extra bottles of Tito's every night because you're home. Drive, that's always a big problem, right? You don't have to drive, you can have a drink. What do you got to do tomorrow? You roll out of bed. You know, there's a long line at the Keurig machine. It's not like what we used to. We're used to that hustle and bustle and move. You know, I've taken an approach of really trying to use this opportunity outside of spending additional family and work, you know, to really invest in myself. And, you know, to that point, because we went a little off subject, I think it's very an ideal time to do it.
Awesome, man. I appreciate that. All right. So
I want to say one thing though about that.
Please.
I know you guys are in coaching, and I mean, you know who I am. You know how many realtors I have and I speak to on a daily basis. And I think one thing
I'm
that
in your
people are
WhatsApp
not,
group, bro. I love it. So
thank you. Well, my point is that I think that there's an issue with people wanting to do so much learning, which I have an issue with learning, but people need to start taking a little bit of action more. I speak to so many realtors that are, I know, plug to your book, take action. But one of
Look,
the
babe, I
issues
didn't even have to plug myself this time.
Oh, so now I got to read this thing. Jeez.
No, but this is my issue. I know realtors that spend all day in Zoom meetings. What are you doing to bring in business? Like all day you're doing Zoom meetings, you're listening to other people talk the rest of your day. What action are you taking? What are you doing so when you come out of this, you have clients? You know, we live in an area, I mean, I'm in South Florida, I'm in Miami, where most of the realtors that I know are social realtors. They pick up business socially. They're dying right now because they don't know how to pick up a phone and call a lead. And I'm like, look, this is the perfect time.
They're afraid to.
Yeah. So I'm like, right now is the perfect time to do it. So when I talk about, hey, you used to call 30 leads, now you call 300, they look at me like I'm crazy. But I'm like, what else are you doing? Oh, well, no, I'm in Zoom meetings all day. I'm like, look, I'm sorry. I don't take Zoom meetings plus noon. I'm doing this one because I'm here talking. But afternoon, after 12, I'm not, if you invite me to a Zoom, I'm not being a part of it. Because I have to work. I have to do other things. I have to prospect. I got to do everything to make sure that now and after this, me and my family are eating. So people, yeah, listen to a book, do whatever, but time block time for what you're going to educate yourself, and time block, more importantly, time to take action and, you know, apply it to where you make money.
The book is Take Action, but we said something earlier yesterday that was great. We said a lot of people are being students right now. That's fantastic, man. Educate yourself, you know, jump on these Zoom meetings, learn as much as you can, but take notes and become an executioner, right? You have to execute on the things that you're learning. Otherwise, it's just shit you put in your head. So yes, I agree with you. You know, make 300 calls, or, you know, I was talking to somebody yesterday who says he does 100 calls a day. Then, and before it was less, you know, before it was whatever. Now it's 100 calls a day. And I, you know, I personally, I think he should push it up to 150. If he could make 100 calls in 2 hours, then spend another hour on it. You know, spend 3 hours a day doing it. Well, look, to everybody that was tuning in today, the entire purpose of this webinar today, we've just over an hour right now. The entire purpose of this was to help you guys understand the mortgage market a little bit better, to understand what a secondary market is, what a bond is, how people participate, what they are, what are they doing, how loans are changing, when we should expect for them to loosen back up for us to do more deals, and how it will track, you know, post-COVID, and how many months or how long it will take for everything to normalize, and if there ever becomes another normal, right? There's a new normal now. One of the things that some folks on Facebook are saying, you know, is it going to be harder to get a mortgage now? I think we all agree. Yes, there are some new rules in place. Yes, it's going to be a little more difficult, but it's not going to be impossible. So we're going to have to put in the work as real estate professionals to ensure that we're properly guiding folks, like many of our panelists had mentioned, and becoming true consultants versus transaction-based folks, you know?
Ooh, I have David,
Sure.
to that mention right there. That gives me an opportunity to say one more thing. I'm sorry if I keep running my mouth.
Nah, it's okay.
To the realtor community out there, it is time for you to find your 2 or 3 most trusted, experienced loan officers in your market and become relationally connected and trusting of each other, and not treating the mortgage lenders as a vendor. That you need us, we need you. We are, you know, holistically, right? 16% of the population buys houses in cash, which means the rest of them have to borrow the money. We don't move housing without financing. So let's please get connected to people that you trust, and really, really learn how to connect. And how do you help each other grow each other's business while still being compliant with all the laws and rules? So that's my only plug. And I'm getting really short on time. I do have another thing that's backing up on us, so I'm going to mute. And thank you.
Thanks, Darren. Appreciate
Nice meeting
you.
you, Dan. And, you know, Dave, before you, I just want to add something to what he said. You should, as realtors, be calling the loan officers, whether you have relationships or don't, for any existing pre-approvals in play for that possibility of coming into business when it's all up again, or if they're still active, in prospecting and calling, you know, it's a difficult time to just reach out about real estate, right? So there has to be some bedside manner in the way that people are going about doing that. To Darren's point, these loan officers that you're dealing with should already be engaging with you. And I think William even mentioned it before, just in front of your transactions, right? Knowing what you have existing that was either in contract, in pre-approval stage. This will kind of give for the person you're dealing with, how high of a relationship you have. Because truth of the matter is, as loan originators, everybody should have been doing that already, right? How do we keep the pipeline together, protect against the future pipeline, then prosper the business, obviously. And to your point also, William, because you mentioned it, obviously take action. Me talking about reading books and coming on Zoom, that's outside. That's people are actually working a full day. And that's their downtime. You know, I know sometimes that always doesn't translate into people, but that's always how I mean it. Take that extra personal time that you have.
I apologize. I didn't mean it towards you. I meant to be.
No, I didn't take it that way to tell you, you know, and because if you took it that way, other people may have. I wanted to clarify.
I wanted to clarify. I'm speaking to actual realtors that were social realtors that made their living based on their social life. They made business, and now they have no business because they don't know how to call.
They have no social life.
Right.
So,
hey, William. Here's good news. Hey, William. The good news is I'm not wearing pants, and I'm sitting at home, man, and I'm on the internet all over the world. I don't know what the hell's going on. What's up?
I keep
God
thinking
bless
of the
America,
movie.
man. That's all I'm saying.
I keep thinking of the movie Casino, right? Where De Niro is sitting behind the desk and he tells his secretary to come in, and he goes, he picks up. Someone forgets and stands up in their boxes on one of these panels. How hilarious would it be?
Hey, listen, I held a huge webinar once. I held a huge webinar once. There were a ton of people on, and a lady goes to the bathroom, and she set her phone down on the tub, on the side of the tub, and went to the bathroom. We were all scrambling, trying to figure out how to turn off the camera. So it happens, man. It happens. All right, so one person says, Jose, what's up, Jose? Good to see you. As you know, I own a condo management company. This month, I have seen estoppel request questionnaires and applications for purchases and rent drop by 80% since March 15th. So them alone, they're starting to see a lot less requests, a lot less business coming through in that sense. Chase increased their home purchasing requirements along with some other banks. Do you believe this will become a trend with other big banks to follow? Potentially, we all discussed this, yes, and for good reason, right? We already discussed that. Somebody wrote, it's all gonna burn down. Okay, everybody has their opinions. Realtors have to push community associations to go viral. This is a tip that he's offering. How much time do you spend on research for a condo listing? How easy would it be if you as a client can access the association platform online? So a lot of great stuff there. A lot of great comments. A lot of folks went in. So I want to say how much I appreciate you guys jumping on board. I appreciate you guys being a part of this. We're over an hour now. Usually I spend about 45 minutes to an hour on these, but there was so much information to put out, and all of you I admire all of you, and you guys are all in position in my life somewhere. So, man, I got to tell you, this was fantastic. Thanks so much for doing this with me. Do you guys have any final thoughts you want to push out about mortgages, about lending to our realtors and consumers out there that they should know moving forward?
Hey, the one thing that I want to share is, you know, having a positive mental attitude and a positive outlook is usually the difference between success and failure, and coming out of a situation like this on the right end of the equation. So everybody just stay positive, tune out the news, do your own research, come up with your own conclusions, stay healthy, wash your hands, and trust me, in life, everything has a way of working itself out.
Yeah. James, any final thoughts?
I had to mute myself. My dog was going running back and forth. Yeah, to Ronnie's point, your mental state, right, creates your particular environment. And in a time like this, you know, and that's why from a social media perspective, we're trying to put some information out there with things like, you know, mental health and things to do with your children and, you know, non-related to all, right? Because it's very easy when you're caught in this Groundhog Day of being in your house, maybe not exercising and doing all of that to get into that bad thought process. But away from that and staying positive, the business is going to come back. We're going to be back to right where we were eventually, right? So plan as such. Invest in yourself, touch with your referral partners, stay in touch with your clients, but first and foremost, be a human being. Be a human being, right? You see, you have an elderly person down the block, help them out, pick up groceries if you can. You see someone in financial need, if you have an ability. I feel fortunate in life to be able to help people. And you know what? A lot of times you really don't do it for yourself, but it really gives you a different type of reward internally to do it genuinely, just to help your neighbors, family, friends, colleagues, and so forth. So without question, if you can, if you have that ability, help your community, help the people around you. Eventually we'll be back to normal. And if anybody needs any assistance, even the industry professionals, listen, it's always good to meet new people and discuss. You may be able to do something we can't, vice versa. And David, thank you very much for involving myself, Ronnie, Jen, and the whole home team. Appreciate it.
Awesome, man. Appreciate it. Jen, any final thoughts?
I agree with what everybody said. I think the one thing right now that people should consider is timeline. I think that wasn't discussed. A lot of realtors need to consider the timeline it's taking to get a loan closed, and also understand that now we're able to extend certain contracts and so forth. So, people are in dire situations and in bad situations where they lose their jobs and everything. And they might have to move right away. And in some cases where, you won't be able to close on a transaction so fast. So, just educate your consumer and stay on top of that. That's, like Darren said, just prepare them.
Awesome, man. Will?
I'm jumping a little bit with Ronnie, not just being positive, but try to spread the positive message. So when people are talking about this, do your research, know historically how fast we got back into business. So when you speak to people, relay that to them. I find that people are making decisions because you're feeding them negative information or positive information. Just an example. Let's just use me as an example, which is not true, but let's just say I have salaries I got to pay. I have assistants, employees, whatever I got to pay. And if I believe, I'm sorry, my kids are running around, that I wasn't going to have another month worth of income or whatever, I might cut him off. Guys, I'm on the phone. I might cut him off early, which I'm not saying I'm doing that, but if, being positive, I might give me an extra week or give them an extra week of salary, 2 weeks of salary. That happens in a lot of different fields. So just relay positive information to people about getting back into this positive. I have a lot of chats and there's a lot of negative information from my own friends. So just spread positive.
And if I could, I'll give you my quick final thought. Stop listening to your social media news anchors putting out bad info. We put this panel together with some really high-level professionals in the mortgage industry so that we can provide real information. Share this and stop sharing the other BS stuff, man. Thank you guys for joining in. For all of you tracking us and following us, make sure you subscribe to my YouTube. Just go to YouTube, search David Kurz, hit that subscribe link. Every single Wednesday, we're doing a great coaching session. This was a special addition to the week because we felt like it was absolutely necessary. Thanks to the 40 plus people that were watching on the Zoom. And thanks for the, I think there's, I don't know how many on Facebook, I can't even check right now, but by the time the week is over, there should be a couple hundred views on this. And hopefully we've helped a lot of people in their businesses and a lot of consumers really start thinking about what's going to happen moving forward. Thank you guys for doing this with me. I'll let you